Hi, I'm Pat-Keon, a research analyst here with Lipper. I'm here to talk to you about fund flow activity for the week ended Wednesday, November 18th. Let's start by taking a quick look at last week's market activity. Both the S&P 500 index and the Dow Jones Industrial Average managed to eke out small gains last week. The S&P was up 0.4% and the Dow was up 0.2%. Both indices bounced back in the second half of the trading week as both indices lost about 2.5% during the first two trading days to start the week. In market news last week, once again, the Federal Reserve and will they or won't they raise interest rates dominated last week's news. And due to some of the economic data that was released last week, it seems like a foregone conclusion that the Fed will raise rates at their December meeting. Some of the positive indicators for this were the new jobless claims remaining at a low level, as well as it appears that inflation may be finally starting to heat up as U.S. consumer prices rose in October. Another positive indicator was that no less than 4 Fed presidents publicly announced last week that they thought December was the right time to start raising rates. All right, let's move back to our fund flows activity now. Let's take a look at our macro groups. Overall for the week, equity mutual funds saw $3.3 billion in net outflows. Taxable bond funds had $820 million leave. Muni bond funds took in about $263 million in net new money, while money market funds saw over $20 billion leave their coffers. Let's take a closer look at our equity mutual fund group now. The $3.3 billion in net outflows marks our second consecutive week of outflows. The biggest contributor to the outflows last week were domestic equity funds, which saw $2.6 billion leave, while non-domestic equity funds also contributed with about $670 million in net outflows. Overall, for the year to date, non-domestic equity funds have taken in $104 billion, while domestic equity funds have seen about $101 billion leave their coffers. Take a bigger picture look at this information, we see that this has been an ongoing trend since the global financial crisis in 2008. And every year since then, non-domestic equity funds have had annual net inflows except for one in 2012. Over the same time frame, domestic equity funds have had net outflows in every year except for one, which was 2013. So while this has been a long-term trend, we've never seen the gap between the two as wide as it is this year. Let's move on to equity ETFs now. The group took in about $1 billion in net new money last week, marking their 6th consecutive week of net inflows, during which time they've grown their coffers by about $23 billion. The largest contributors to the net inflows last week were PowerShares QQQ, which took in about $690 million in net new money, and U.S. Oil Fund had about $370 million in positive flows last week. And the SPDR S&P 500 ETF saw about $1.7 billion leave their coffers. Moving on to our taxable bond fund groups now, let's start with mutual funds. The group had $820 million in net outflows last week, their second consecutive week of net outflows. Largest contributors to last week's net outflows were high yield funds and loan participation funds, which had approximately $1.2 billion and $230 million leave their coffers, respectively. Moving on now, we'll take a look at taxable bond ETFs. Group had $1.2 billion in net inflows last week. This broke a string of 3 consecutive weeks of net outflows. Largest contributor to the net inflows was the iShares Core U.S. Ag product, which had about $900 million in net new money come in. And for the outflows, we see a very similar picture to the mutual fund side for taxable bond funds, in that high yield products were the largest contributor to the outflows with about $350 million total net outflows. Let's take a closer look at our muni bond fund group now. They've had net inflows for the seventh consecutive week. This week's total was $263 million, of which the lion's share came from funds in the national muni categories, which took in about $250 million. And the single largest contributor within that category was the high yield muni debt fund category, which had a roughly $127 million in net new money come in. Our last group to take a look at now is money market funds. As we stated earlier, another significant net outflow for the group, saw about $20.2 billion leave. This pushes their year-to-date net outflow to $23.2 billion. The largest contributors to last week's activity were funds in Lipper's money market funds category, which saw about $14.6 billion in net outflows, while Lipper's institutional money market fund category had about $13.8 billion in net outflows. Well, that wraps up this week's report. If you'd like to take a closer look at the data yourself, please join us at our website at www.lipperusfundflows.com. And please join us here again next week where another analyst will be speaking about that week's fund flows activity.